Welcome back. This is Your World at 10. Now, what with the way the equity markets are faring, it's quite clear that 2009 is going to be the year of debt. Amongst the first of the block is Tata Capital's recent issue of non-convertible debentures. The company was looking to raise 500 crore rupees, got 3,000 crore rupees in response, and using the green shoe option has mopped up 1,500 crore rupees. Now, is it all because of the 11.5 to 12% yield that the NCD is offering, or can we expect innovative debt products to be the flavor of the season? To discuss that, I have with me Ravi Kapoor of Citigroup and Praveen Kadle of Tata Capital. Gentlemen, thank you very much for joining me, and congratulations, Mr. Kadle, on your issue. Ravi, I know Citi was one of the 3 lead managers. Let me come to you first, Mr. Kadle. Do you suspect or do you believe that the kind of retail appetite that your issue has unlocked is available simply because of the kind of yield your product was offering, or do you believe that it will exist through the year even for other innovative kind of debt products?
No, I don't think it's only the yield which matters in this debt products. What is important is the other features like the tax issues, considering the requirement of the small investors with regard to the tax, whether the TDS will be there or not there. Similarly, from the high net worth individual point of view, what kind of a tax benefits he can get, especially on the long-term capital gains. So one is tax. The second one is also the liquidity in terms of to what extent this instrument is liquid. In our case, since the instrument is listed on the National Stock Exchange, there is a liquidity. In addition to that, we also provided some other features in terms of liquidity. So the second issue is the liquidity. And third, of course, it also depends upon the brand of the or brand name of the company which is issuing the stock or the bond. So these are, I think, the 3 important issues. I think going forward, innovation would be required to bring in more features in terms of whether there will be any yield which will be upfront or which would be also there at the end of the...
All right, Mr. Kadle, I'll ask you for more details on what you think constitutes innovation and what we can expect over the year. But let me bring Ravi into this. Ravi, will yield be the determining factor, as I asked Mr. Kadle, or he pointed out tax efficiency, liquidity, but these are features that other products can boast of as well. So what do you think was the big, unique selling point of the Tata Capital issue that managed to get it this kind of response and, features that other products can emulate, therefore, in this marketplace?
Yeah, thanks, Menika. It's not only the yield or the factors which I mentioned. I think how do you understand the retail psyche, how do you understand the market, how do you package them, how you present them, how you distribute the product, and how you incentivize the distributors are all key features in making and offering a great success what Tata Capital's NCD has been.
All right, Ravi, patting yourself on the back along with the 2 other bankers to this issue. But, let me come to the point. The fact is that this issue or this NCD or this product does offer a substantial spread over what you'd get in vanilla deposits, right? You're offering between 11.5, 12. In a regular bank deposit at this point in time, you might get 10, 10.5. So my subsequent question to you is that through the year, what kind of appetite do you expect from retail investors? I'm not getting into institutional. From retail investors for debt product, and will that appetite only depend on the pedigree and all of that? Of course, you want to be invested in a trustworthy company, etc. But will most of that appetite depend on the kind of spread that you offer or the incremental yield that you offer versus vanilla deposits?
I think given the early stage and the fact that our debt markets are not as vibrant, deep as the equity markets we have, I think the understanding of the complex product with the retail investors, to my mind, is going to be limited, and therefore we would see some kind of a plain vanilla offerings coming into the market, to start with, which can sort of take the liquidity out.
I also agree with Ravi to some extent that a simple vanilla product would be welcome, but I think some kind of innovative features would be certainly welcome by the investors. I don't think investors would be that dumb to understand some kind of extra features. It needs to be simple, I understand, but it should not be very plain vanilla kind of a product. Ultimately, as you know, you can have maybe 4 or 5 such issues which would be plain vanilla kind of a products, or issues, but would not really, going forward, would not attract that kind of a response. So you may need to bring in some features which would be interesting, not only from the investor's point of view, but also from the point of view of the issuer.
Give me an illustration, Mr. Kadle, of what kind of features you're referring to, what kind of innovation you're referring to?
I did mention in the beginning in terms of the tax efficiency. I think it's very important because the tax, when you are paying 33%, 35% kind of a tax as regards high net worth individuals, I think you would need to bring in some kind of a tax efficiency. Liquidity will be important from the small investor's point of view, because he may not like to block in his amount for a longer period. So in case of bank deposits, he has got a lot of flexibility in terms of having the liquidity. So from small investors' point of view, while he would be looking at avoidance of tax, he would also look at liquidity issues. So I think one may need to bring in these features depending upon what kind of an investor base you want to attract.
I agree with Praveen to some extent. Yes, that there would be innovative product, but I think easily understood innovative product which can be mass marketed, could be done at the retail level, i.e., as you said, this bond or any other fixed deposits which are in the market. And more importantly, if you see, there is this IFCL sovereign guarantee tax-free issue which is there in the market. So, these kind of things can be sold to the retail investors where their understanding of the product is great. But when these products start becoming more complex, say for example, if you're putting some kind of a credit enhanced structure, or you're putting some more complex structure through some kind of escrow mechanisms and so on and so forth, I think those are better understood by the institutional investors, and hence the audience for that case would be the institutional segment.
This issue saw a 3,000 crore rupee response. Ravi, do you think this is the kind of appetite that we can see for, issues like this through the year? Or do you think that because this was one of the first of the block, it managed to get this kind of appetite and, unlock this kind of money, but we may not see this kind of success repeated through the year?
I think, there is money available at the investors' end. Right now they don't know where to invest properly, where to invest safely, and I think if an opportunity arises for them to invest wherein their money is safe, money is giving returns, they would definitely come forward. And I think there is plenty of money at the retail investors level, particularly at those level where people are just putting their liquidity into the bank. They can definitely access this, potential issuers can access this market.
Mr. Cudley, do you agree with that? Do you believe that if you weren't amongst the first of the block, and let's say you had come in 6 or 7 months later, would you have seen this kind of appetite?
Yeah, I think so, because as Ravi mentioned in the beginning, we have a very high savings rate in India. People do put that money in the bank deposits or real estate or jewelry, and we still haven't seen the kind of a tapping which perhaps one can do in the rural market, because in rural market the money goes into the real estate or in the bank deposits or in jewelry. So I think I'm not talking only purely rural in that sense, but even the semi-urban market. So I think the potential is huge that needs to be tapped. I think this, I hope, is the beginning of a revival of a debt market in India.
All right, gentlemen, we'll leave it there, exactly where we began. This will be the year of debt. You've seen one issue that recently closed, Tata Capitals do so well, and maybe many more on their way will get that kind of response as well. Ravi, Mr. Cudley, thank you very much for joining us. Time